Everybody wants to know, are we heading into a recession? And the truth is, nobody knows. There's economic indicators that could make an argument either way. But for the intensive purposes of this video and our February 2023 market update, I want to focus on just a couple of key metrics or numbers that we're going to use to consider to determine the health of the market. So the first thing I want to think about is, well, let me tell you this. We're comparing numbers year over year. So this would be January 2022 to January 2023. There are a few differences that we want to look at. The first is that from January 2022 to 23, we've seen an increase of 10% in overall home sales. That would be 8,000 to 8,800 in the greater Los Angeles area. This is regardless of price point, bedroom count, condition, any of these things. This is broad market data for the greater Los Angeles area. The second thing that we want to look at is the median home price. A year ago, it was $850,000. Today, it's $890,000. For those of you doing quick math at home, that's a 5% increase, which I'll spare you all the details why, but it's an incredible number. It's sustainable, it's very healthy for an economy, and it's frankly the amount of appreciation that we want to see because it outpaces inflation, but it isn't going to be alarming enough that it could cause a pullback when we had 10, 12, 15% growth year over year. The third thing that we want to consider is what's called the months of inventory or the supply. A year ago, we had around 2 months on average of homes available for sale on the market. Right now, we're hovering around 3 months of inventory, but you probably still feel like that's a little low. Well, the reason is because 6 months of inventory is what we would actually consider to be a healthy market or a balanced market. 3 months or really anything under 6 months is still leaning a bit more towards sellers and being closer to what we consider a seller's market. Now, things have moved to be more in favor of buyers as contingencies for loan and appraisal and the request for repair options have come back into play with the offers that we're writing, but it still does favor sellers. Now, this is assuming, and if you're watching our videos, that you price it right, you prepare and stage your property well, and that you're in a good location and don't have any glaring errors or issues that are affecting the sale. The other thing that we want to look at is that 6 months ago, interest rates were probably hovering around 7%, and it was causing everyone to sort of breathe a collective gasp because we had no idea where interest rates were going to go, and there was seemingly no rhyme or reason. Well, I'm happy to report that interest rates have come down slightly and have sort of found their happy place right now, at least, around 6% on a 30-year fixed rate mortgage. Our last video, we talked about many banks are also offering relationship financing, and some money is actually becoming more available in first-time buyer programs, government-assisted programs, and a few more loan products that maybe weren't available 6 months ago. The people that money is getting really tough for are you investors. So let me tell you, hard money, private money, anything on the secondary market is getting really, really tight. We just do not have the access to capital as investors as we did over the last 2 years. Now, this isn't a problem. It was actually what was intended to therefore empower primary or rather end users or people that are buying houses to live in themselves to empower them to actually get the property that's on the market. This is probably part of the reason that inventory has also increased as well, because a lot of the BlackRock, private hedge funds, and even mom and pop investors were buying up as much inventory as they could. So in short, this market is very healthy. We're experiencing buyers and sellers that have confidence on both sides of it. And while certainly nobody has a crystal ball as to where things are going economically, right now everything looks like we're progressing as we would like it to be, with all the metrics in alignment to a very balanced and healthy market. I'm Brad Gilbo with the BWG Realty Group. If you have any questions about what any of this means for you, reach out to me or our team and we would be more than happy to take care of you.